All right, so now that we have the two historical difficult months in the rearview mirror, August and September, where does that leave us? Today we're going to dive into where we stand, where we're going, and what type of support zone needs to be held. So stick with me. My name is Brian Cannon, and welcome to Markets in 5. All right, so jumping right in, this is the S&P 500 chart you're familiar with. You can see that we've been monitoring this longer term kind of up channel trend with higher highs and higher lows. And so as of recently, we had just kind of breached the downside of this up channel trend. So we've breached support. I think the last time we did Markets in 5, we were up here. We had just kind of crossed over the 20 and 50-day moving averages. Well, then the Fed came out, gave their hawkish view on rates and inflation, and the market gapped down and then just has kept going. So even though we're watching this support zone very, very closely, what's the most important at this point is this 200-day moving average. So again, any individual investment or index that's above its 200-day moving average is considered to be kind of heading the right direction, and any below generally is not in a good place, heading the wrong direction. So RSI does not support a move up at this point yet. It's still below the 50 range, and MACD as well is negative and still crossed over to the downside. So we're watching for a cross up. At some point, it's maybe an early entry zone, but that needs to be supported with an RSI move above 50 as well. And so we're in this zone. We're watching this must-hold zone right now. So if we cannot hold that 200-day moving average or just below it, so keep in mind some of the algorithmic traders and robo traders are designed to sink a stock below its support level, stop everybody out, and then buy all the shares on the way up. So you have to have a zone as opposed to a hard and fast line. But that's the zone we're watching. But we will feel much better when we break back into this zone to the upside, or we'll know that this is a trend that's going to develop kind of a worse situation if it breaches this zone and starts heading down. Okay, so another way that we monitor the risk for the S&P or really any index is also keeping an eye on the VIX, the volatility index. So the VIX is a measure of fear, and so obviously if it's rising up, that means fear is rising, and if it's dropping down, that means fear is subsiding. So as of right now, you're starting to see a mild breakout here in the VIX. So it's had a little run up here, which has obviously coincided with a run down in the market recently. And so as we're watching this zone that we talked about for the S&P 500 to the downside, we're also watching this zone for the VIX to the upside, right? So if it continues its run up, then you can bet your bottom dollar that the S&P will drop. So it's just another way to kind of keep your thumb on the pulse and to determine the level of risk in the market, and then ultimately determine how much risk do we want to take inside of our portfolios. So if we take a look at the S&P 500, but more on a weekly basis, a little bit longer time frame, you can see that the range that the market is pulled down to is still inside of an acceptable range of volatility, right? So it's kind of holding its support line on the way up here. So if we blow this out and take a look at it, and again, this is a weekly chart, so it kind of knocks some of the chatter out of the day-to-day moves. But you can see our signal is still a buy from a weekly perspective. But I could imagine that if this breaks to the downside, there probably will be a sell signal that kicks in for the S&P 500 on a weekly basis. So again, just another way to look at it that might give you a little bit of reprieve in regards to not feeling that like this thing is destined to roll over. So in summary, as we enter Q4, usually the market does pretty good. Now, October can serve as a real bear trap for investors. It's very volatile. Usually ends up positive, but it is very, very volatile. So a lot of times it can squeeze investors out. and make them sell at the wrong time. So if you are tactical in October, my only warning is just be very careful and work real hard to put it back to work at lower levels. Also, you might be aware, but I did release my book, Retirement Unplanned, and very proud. It's on Amazon, so feel free to pick up your copy. And otherwise, I'll see you on the next Markets in 5.